So there's only 2 more days left in the year to get as much return as we can from our stock portfolio, from our dividend investing. Welcome back to the channel, guys. My name is Bruce Wang. We have like 2 days left in the year. I want to get as much return as I can from my portfolio. So I'm gonna make some changes to it, and I'm gonna go over the entire portfolio with you guys. The M1 Finance portfolio, the Wang Gang portfolio. So this is my dividend investing portfolio on M1 Finance. Value so far is $8,342. Total gain so far is $350. $250 of that comes from market gains, and $100 of that comes from earned dividends. So I'm actually at $96, almost at $100 in earned dividends. Maybe in the next week or two, I'll see $100, but it's taken me a while to get to $100. And if you can see in the 1 month chart here, I'm making on average around maybe $20 a month when it comes to these earned dividends. But I'll give you guys a more in-depth view of that in my dividend tracker, which I'll be going over in a few minutes here. This portfolio is doing pretty well, not as well as the S&P 500 for this year, but as a new beginner in investing, a 12% gain is a respectable gain, I believe, when it comes to my investing. I've done a lot worse. I've done a lot worse in the past, so I'll take it if it's 12%. If next year, if every single year I can do 12%, you know, that's what I'm hoping for here. So when it comes to the slices in this pie, I have 13 separate slices, and basically I divided the entire stock market into all of its individual sectors, and I've allocated 20% in real estate, 15% in bonds. So this is new. It used to be originally it was at 20%. I've gradually decreased it so I can put those points into other slices of the pie here. Consumer defense is at 10%. So I don't want to go over every single little one here, but if you guys want to follow along, I'll have links in the description where you guys can, just see my entire portfolio. I share that with you. I share this portfolio with you. The links will be in the description so you guys can follow along. So in my real estate sector, I made some changes here. I got rid of NRZ. This is actually the smallest position in this pie here. The biggest position I have so far in here is Realty Income, which is something that you will be familiar with in my Robinhood portfolio. BPR, LTC Properties, Main Street Capital, and Stag Industrial. So I'll only be holding these 5 stocks in this portfolio from now on. And the main reason why I'm getting rid of NRZ is because their dividend income is not safe. It is a bit of a speculation here, and I'll back that up with a little bit more of extra data with you later on in this video. Other than that major change, everything else is pretty minor. It's just me allocating a bit more or less into other individual stocks. So the second biggest change here is going to be in the Dogs of the Dow 2020. I have to double check this, but basically these are the stocks that are going to be in the Dogs of the Dow for 2020. And last year, or for 2019, Dogs of the Dow didn't perform that well. It actually performed worse than the actual the Dow Jones. For anybody that doesn't know what the Dogs of the Dow are, basically, the Dogs of the Dow are the 10 highest yielding dividend stocks that are underperforming in the Dow Jones Industrial Average. This is a dividend investing strategy that historically does better than the Dow Jones. So this is something that I want to try out. I just recently heard about this a few months ago, so I almost started M1 Finance just for Dogs of the Dow. Something that I can just throw money at every single week here. And if we take a look at the gains, some of these stocks went up by 20%, 30% here in Caterpillar. So a lot of these stocks did really well. Another 30% gain here in Dow. ExxonMobil went down a little bit. IBM is not doing so well over the past few weeks as well. So when it comes to the Dogs of the Dow for 2020, I'm going to be doing the same exact strategy, and I'm just going to just update this pie so that it reflects Dogs of the Dow for the next year. If you guys want to learn more about this dividend investing strategy that I'm pretty sure most dividend investors know about this, but for anybody that's new to the channel and new to dividend investing, I'll leave a link in the description so you guys can check that out too. So moving on to bonds here, I have 15% of my portfolio now allocated to bonds. And that is because you don't want to be completely invested into stocks if a recession comes. Being invested into some bonds will protect you a little bit from that, protect you a little bit from the volatility, that is. So when it comes to consumer defense, I have my biggest position is Philip Morris and Altria Group. If you take a look at all of my stocks, I'm basically investing in very conservative, very large cap stocks, very blue chip stocks. Not too much speculative investing for me as of late. You know, as I'm getting older, I'm moving a lot of my money into more stable stocks. And when it comes to my investment portfolio, I would say I'm a conservative type of investor with a tendency to make some risky plays. That is my that's how I would categorize myself. Financial stocks, some risky plays I've done here is with Invesco, and 25% of my portfolio is going to an ETF. So that just goes to show you that I love that. What is that? So that word starts with a D. Diversification. I honestly forgot the word diversify. So yeah, that is the word I was going for. Next is communication services here. So when it comes to communication service, I'm in AT&T, Verizon, 50-50 split. One fun fact is that my phone plan is with T-Mobile. The only reason why I don't invest with them is because they do not provide any dividend income. So we're about halfway through here. Next one is going to be the technology sector. I have about 5% allocated to this, and I'm bumping that up to 7%. My biggest holdings in here are Apple, Microsoft. All these companies have a lot of brand recognition, and one company that sticks out is going to be Alphabet. Alphabet is also known as Google. They do not provide any dividend income. So I think that the growth will outweigh the dividend income. So that is why I'm investing with Google here. When it comes to Google, if you guys didn't know, they pay me for my YouTube videos. And I think it's only right that I invest a little bit with the company that is paying me to make all of these videos here. Next is going to be consumer cyclical. Yeah, this is the messiest pie in my opinion right now. So I did a lot of changes here. You can see that this entire pie is out of whack. So when it comes to this sector, I'm kind of on the fence here. I kind of want to just do all dividends, but I think that going into some of these companies, such as like Tesla, Amazon, and Alibaba, the growth will outweigh a lot of the dividend income. And at this point in time right now, to be honest, this portfolio is really small, right? The entire M1 Finance portfolio. And when I'm thinking about the future, I'm thinking about $1 million worth of dividend stocks and growth stocks and all that. I think in the future, when my portfolio is a lot bigger, I'll have a better vision when it comes to this one sector, because right now it's just really messy, and there's some stocks that I want to sell, but I haven't held them that long, so I don't want to get hit with that capital gains. Other than that, yeah, this is something that I still have to work on, but so far it was like 6% returns, not too bad. So when it comes to healthcare, I have a very small holding here of Johnson & Johnson and Pfizer. Industrials, I think this is pretty small as well. Yeah, 5 holdings here. 3M, UPS, Caterpillar, Waste Management, Boeing. You're going to see a lot of overlap when it comes to some of the stocks here, such as like Caterpillar. You see this in the dogs of the Dow as well. 3M might be in the dogs of the Dow. I have to double check that. The energy sector. So when it comes to this one sector, I have no clue about any of these stocks that are in this sector. So that's why I kind of just went with the ETF, Vanguard Energy ETF here. And, you know, I think I made the correct choice because I don't want to do any more research on all of these stocks that I already have, and just having an ETF that exposes me to all of these energy stocks is already good enough. I have 3 shares. Average cost is $239. $3.6 billion in assets under management, and a pretty decent dividend yield of 3.4%. So nothing to complain about. Same thing when it comes to the utilities here. And I have the utilities ETF and this one, Consolidated Edison Inc. Consolidated Edison is also on the Dividend Aristocrats. That is one of the biggest reasons why this one stock is here with the ETF. Moving on to the last pie here, it is basic materials. We are almost done here, guys. Total value in here is $165. This is the smallest position in the entire portfolio here, and it has brought me 20% return. So I wish that, I cannot predict what these stocks are going to do. All right. So it's just surprising to me that I get the biggest returns from the smallest positions from the smallest sector in the entire portfolio here. All of these companies are dividend aristocrats, well established, top of their class. It was really difficult for me to allocate a target for each and every single one, so I kind of just did 20% each one because it was really difficult for me to choose which one to have the highest weight. So when it comes to the biggest returns, I got that from the technology sector. Second was basic materials, which we just went over. Third is from financial services. And the worst return is actually from real estate. And it was only down by 0.5%, so not too bad. Today, I signed up with a dividend tracker called Simply Safe Dividends. I heard some good reviews about this from a few other YouTubers, so I kind of just wanted to check them out myself. And for anybody who doesn't know what a dividend tracker is, basically, you upload your portfolio onto these dividend trackers, and they tell you when a dividend is gonna increase or when a company is going to cut a dividend and stuff like that. And it will also rate if one of your stocks will be able to pay a dividend, or if it's like very speculative, or if it's unsafe. My stock portfolio is getting a lot bigger, about $35,000 right now, totally invested in the stock market. So I want to take a more serious look at a lot of the dividends that are coming in from my entire portfolio, make sure each and every single one is pretty safe and they're not going to cut anything. And if they do, I want to be able to catch it soon enough so that I can either sell it off or make the best decision at that time. I uploaded all three of my portfolios on here, and the balance comes to about $35,000. And I'll probably make a separate video on here, but today I just want to focus on the M1 Finance Wangang portfolio. So 8,367. There was some discrepancies between this and my actual stocks and my actual value here, and that is because I have 60 stocks to upload, and I did them all by hand. This is what it looks like. So you just put in your ticker symbol, and then you'll add in the quantity, and you'll add in the share price and stuff like that. And I did each and every single one by hand, so I couldn't accurately put every single one in perfectly. But but this is close enough. The cool thing about this is you can see the annual income. I haven't seen like a wider picture like this, but my projected annual income is $324 as of today. And next year, I'm planning to add, if I keep it up at the rate that I'm going, I'll probably be investing around $15,000 to $16,000 into this account by the end of next year. But if I decide to, increase the amount that I'll be investing, that will be a lot higher, maybe even closer to $20,000. So $324 in annual income, and that will only go up as I keep reinvesting and putting more money and funding my account even more and more. So this tells you upcoming payments. This breaks down monthly how much dividend income I'll be getting, and the highest dividend that I'll be receiving is going to be $41 in December. The lowest is $17 in January. There's just so much data here. When I did all this morning, I probably spent like 2 hours just going over every little. So for example, LTC Properties pays a monthly dividend, and I'll be getting $1 every single month. So I'll be getting the most dividends from BND, which is my bonds ETF, and the second will be from BPR, Brooksfield Properties. Realty Income is the third at $19. Whenever I see this, I'm thinking that this is not that much, but this is so much more than I had when I first started. So right now, I'm just trying as hard as I can to stay consistent. You know, if I'm taking baby steps, I have to take these baby steps. You know, this is just the process of, you know, getting to that $1 million mark. One thing I realized is having $1 million in stocks is a lot more difficult than having $1 million in real estate. You do what you can to try to create passive income, right guys? So moving back to the main page here, you can see income, annual income. You can see the balance and performance, valuation, dividend safety, dividend growth, diversification. So this is something that was really interesting to me, is dividend safety here. 3% may be unsafe when it comes to my entire portfolio, and all of that just comes from new residential investments. And that is one of the reasons why I am basically eliminating NRZ from my portfolio. I want my dividend portfolio to be able to grow and not cut dividends. And this is just one step towards that direction. NRZ is considered unsafe from Simply Safe Dividends. So that is one of the main reasons why I am taking it out of the portfolio. And if we jump into you know, the NRZ stock here in this dividend tracker, it will give you a lot of information here. This is just so much stuff to go over, and I don't want to really bore you guys, you know, reading all of these little descriptions. So if you guys are really interested in using Simply Safe Dividends, I'm on that 14-day free trial. I'm not trying to pay $400 every single month. I think that's how much it costs. No, $400 per year. What am I talking about? $400 a month. Right now, I believe that it is not worth $400 for me to, you know, invest in this dividend tracker for the year. But maybe sometime down the line, I think it'll be worth it. I don't even make $400 a year from my portfolio, so I think that $400 will be better be invested into stocks and ETFs and stuff like that. So I'm going to organize this by dividend safety, and you can see that most of my portfolio, all of the stocks that I have a relatively safe dividend. I would say, yeah, most of them. And NRZ is the only unsafe one that I have. And I have a few that doesn't pay any dividends, and some ETFs here that they just don't rank. So I thought this would be a cool thing for me to show you guys that, you know, they have dividend trackers that are free to use for at least half a month. And you guys can really get a good glimpse of how your entire portfolio is doing. So, you know, go check them out. Go check out M1 Finance if you haven't already. If you want to see more videos from me, go check out these videos here. Like, subscribe, and Happy New Year's, Merry Christmas, Happy Holidays, all that. I love you guys. See you guys next year. Bye.